This my two Satoshis. This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah.
It's your boy Crypto Blood. I'm back at you with another crypto news video. My two Satoshis, that is. And I hope everyone's doing well. Blood in the streets. And it's ironic because Crypto Blood has on green today. And we are definitely not in the green market right now. Deep red for most of your cryptocurrencies. I'm going to explain to you today what is going on and why I feel like you should really take heed to my warning about us heading lower from here. It has to do with an external factor. I'll explain that in this video. It's all about the infrastructure bill and how that's going to deeply impact the cryptocurrency markets. My business and the businesses that I run in this space could be deeply affected by this as well. So this is, I'm not saying this is like the end of crypto and we're heading back to a $1 trillion market cap or lower. I'm not saying any of that, but this could mark a pause in our rally, a crazy rally we've seen over the last year or so in crypto. So just going to give you my breakdown, my two Satoshis on it, my analysis on it. You could take it or leave it. I don't care. I'm just putting it out there for you. So we'll take a look at this out of Market Insider. They're covering this. I tweeted this earlier today. Didn't even realize that people were talking about this and connecting the dots. I mean, it's an easy dot to connect, to be honest with you. I shouldn't be surprised, but they're saying that Bitcoin tumbles towards 60,000 and actually a dip below 60 as China fires another warning shot about crypto miners. They actually, I think, kicked one of the members of the party out for engaging in crypto investments as well. But in addition to that, and more importantly to me, is the fact that we have this $1 trillion infrastructure bill that becomes law today, I believe, or very soon. It's all finalized, and this will greatly impact cryptocurrencies because of a couple lines in that bill that really impacts us from a tax liability standpoint. And I think that's what the markets are reacting to be honest with you. And I also got to give you guys one interesting angle out of Vice. My lawyer actually sent this to me. The US government made it illegal to buy these NFTs. And we're going to take a look at this because this could be a watershed moment for NFT markets. To see the government make an NFT illegal, I don't even know the context of it. I just saw the headline and I said, I got to definitely cover this in today's video to give you guys some context on what regulatory frameworks look like or regulatory actions will look like towards NFTs. That's something that many people haven't even thought about. So we'll take a look at those two topics today in this episode of My Two Satoshis. Let's get it.
But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this.
And before we start, we got to take a look at the technicals, bityard.com chart. I'm going to go over this 3-strike you're out scenario that I think is playing out in Bitcoin. So if you take a look at the 1 hour on Bitcoin, so this is strike one, in my opinion. This is a steep one. I knew we would break that one. That's just, I mean, you got to break that type of steep trend. Can't be sustained forever. So that's strike one in my book. Strike two was going to be this less steep trend line that we seem to have followed for a while. And strike three in my book, ladies and gentlemen, was this trend line, which is a more natural, more sustainable trend line that was broken earlier today, late last night. Huge tumble in Bitcoin. And again, it has something to do with this infrastructure bill, in my opinion. So those are deep-rooted fundamental changes or updates that the market has to digest, and they're doing that now. Now, could we see a move back up toward this trend line? Sure. I don't think so personally. I think if we break, and we've broken 60K, that's what a lot of traders are talking about. Me personally, I'm thinking if we break $58,000 Bitcoin, which is basically this area and kind of like this area, right? These two areas, that's where we have to hold. If we can't hold that, then hell, we could literally go back to the $40,000 area in Bitcoin before seeing some move back up, or at least consolidation beginning at that point. Or we could actually, and before even that, I would say $52,000 Bitcoin. So those two levels, I'm just gonna mark that really quickly, this area as well, before we get to this area. But that's where I see us going, just because of this such magnitude and shift with fundamentally how the governments are going to look at Bitcoin and treat it from a tax perspective. That is slightly bearish. That's bearish news. and that will bring some fear and has brought a little fear into the crypto markets. Listen, you guys know the only thing that can stop Bitcoin are the governments themselves. That they can hamper it, they can't stop it. I should make that clear. They can't stop the tech, but they can surely scare a lot of people out of their positions, cause a lot of panic, and really make people not have an appetite to hold Bitcoin. They'll do that, and they're going to do that. I've said this in the past. The battle between the government and cryptos hasn't even started. We're like in the first or second inning when it comes to this stuff. We haven't seen the governments really throw their shot yet. They're going to, believe me. You see $100,000 Bitcoin, you see more and more people becoming very wealthy in this new asset class. The governments are going to come in and definitely spoil the party. So you got to be prepared for that. If you know that's going to be the case, you know they're not going to just let this be a gravy train for the masses to really come up. You know that's coming. So we got to keep that in mind and have a strategy around that. And I think the time is now to do that. So I want to really quickly, before we get into the infrastructure bill, again, my lawyer sent me this and was pretty shocked that this whole situation that occurred went under the radar, in my opinion. This came out on the 10th of this month, but dozens of cryptocurrency addresses in one exchange were added to a U.S. sanctions list this week, including NFTs that are still for sale. So what happened here? So the government, U.S. government, put 57 cryptocurrency addresses in one exchange on an OFAC sanctions list on Monday for facilitating ransomware and money laundering. As it turns out, one of these addresses controls a bunch of NFTs that were still viewable on a popular digital marketing place. On Wednesday morning, blockchain infosec company Elliptic pointed these out in a blog on Tuesday, noting that the total amount of cryptocurrencies in the sanctioned address amounts to more than $300 million. It's the second time the U.S. government has sanctioned an exchange and the 8th time it has sanctioned crypto addresses. So what does this mean for you guys? First of all, it means that if you're going to trade on a crypto exchange, make sure you're in and out. Don't keep your funds on an exchange because it's easy for them to simply shut that exchange down. I've seen it so many times over the last 8 years in cryptos. Anyone remember BTCE? They were shut down by the government and all the funds that were on there were lost. That was an OG market. I used to trade on that exchange for many years, but that is a central point of failure for your portfolio. So make sure you don't keep too much on these exchanges. Though I don't care where they are, from the more legit ones to the more spotty underground exchanges. Don't keep your funds on there for any length of time, because now what this sanction has done is that any U.S. company or exchange, whatever, is not legally allowed to conduct any sort of business with it. So OpenSea, a U.S. based company, isn't allowed to facilitate that transaction either, even if the buyer is based outside the U.S. This is crazy. So we think that cryptos and NFTs and blockchain is a way for us to become more free and do what we want. It is, but at the same time, it isn't, because most of these businesses still operate within the framework of the U.S. law and U.S. regulatory agencies, right? The actual NFT is still on the blockchain for sure. They can't remove it, but what they can do is tell companies and marketplaces that interact with the blockchain that they can no longer allow the sale of that NFT on their blockchain to occur. And essentially, that pretty much relegates that NFT to a small group of individuals. So in other words, the government can control the NFT space and crypto space as well. So it's crazy that this is happening. You guys got to let me know what you think about this. It's not shocking. I've known that they could do this as far as blacklisting certain addresses or sanctioning certain addresses. That is not new. In fact, your USDT tokens that you may hold on Ethereum can also be blocked. In addition to that, they can actually be frozen. So your wallet address can be frozen and prohibited from moving those USDC and USDT coins on Ethereum. It has been done before. I don't know if you guys knew that. Go research it, go check it out. So there is still this gray area where blockchain is not necessarily as free and open as you may think it is. All right, let's take a look at the meat and potatoes of today's video, which is this infrastructure bill that is causing a lot of issues in the crypto markets and probably giving your portfolio some pain today for sure. So as we've seen that Bitcoin is definitely taking a tumble along with all of the altcoins, but it's because of this $1 trillion infrastructure bill, and there are a combination of bearish factors that is in this bill that is not good for you. One being crypto trading taxes. So what is going on is that basically this infrastructure bill comes with some new rules for crypto brokers. And so now crypto brokers must report transactions worth over $10,000 to the tax authorities. Critics have said that the term broker is too vague, and the new regulations might mean other market participants such as miners, traders, and even node operators like the company that I run may have to comply with them too. This tax increases on digital assets could raise another $28 billion according to the New York Times. So they're trying to come after this newfound wealth that many of you have come into, and they want to tax that. The partner over at Block Asset said that this legislation is expected to have an indirect impact on the industry, as service providers may begin to charge higher fees to compensate for the new tax levy on them. Also, we have something out of China, ladies and gentlemen. It is being reported that China takes aim once again at extremely harmful crypto mining. Beijing is actually talking about increasing the price of energy for violators who are found to have been mining still under the guise of trying to become carbon neutral by 2060. China is going to launch a full-scale clampdown on cryptocurrency mining by focusing on commercial mining and the role of state-owned businesses in the industry. So those two things, to me, more impactful is the infrastructure bill. We've known about China and what they're doing and trying to clamp down on Bitcoin and Bitcoin mining and the industry and all of that. That's nothing new. But what is new is the passing of this infrastructure bill, the increase in taxes for individuals moving money over $10,000, which is not a lot of money. That will definitely cause some more issues, and believe me, more is coming down the pike. Don't think it's going to stop here. Bitcoin will maybe in the crypto markets will take a pull back here, take advantage of this, of course. But believe me, if it starts to head higher and make newer all-time highs, the government are going to come out with even more restrictive, draconian type laws. So watch out, be careful. Make sure you always have some dry powder to buy on days like this. Though I think we're heading lower. So don't shoot your shot on today. Please do not shoot your shot on today. I think we had a little bit lower, and then we'll see what happens at the $58,000 and $53,000 marker in Bitcoin. And hey, we'll have to see. But always know altcoins are going to, of course, rise faster than Bitcoin on the way up, but fall faster and have more of a gut-wrenching pullback than Bitcoin does on the way down. So keep that in mind. If you found this video informative, you guys, make sure you thumbs up, comment in the section below, and definitely share this video if you want your friends and family to hear the real in crypto by your boy Crypto Blood. That's my two Satoshis. I'm out of here. Ha!